So as you go over to the quotes area, right? This is where you see the currency pairs, the Forex currency pairs, right? So if you click on each of them, you can see that what the pair is. In order for there to be a foreign exchange, then there needs to be a convergence from one currency to the other. So in this case, there will be the euro to the US dollar, the United States, the Australian dollar to the US dollar. The third one would be the Great British pound to the US dollar. The fourth one would be the New Zealand dollar to the US dollar. Now, when you click on it, you have three options. You could trade, you see the chart, you could see it, or you could see details on it. But the chart could also be seen over here on the second tab on the bottom. The third tab on the bottom, you see your balance, your equity, your free margin, and you can see your open trades once you place a trade. You can see your history and your settings. Now for settings, right? Right now my chart is I already fixed it up. But when you set up your chart in the beginning, it might be set to a default green and black, which will look like this. So the first thing to do is let's set up your chart. So you go to it'll be like this. Slowly, you'll go to volumes and you'll click that on. You'll go to trade levels and you'll click that on. You'll go to colors and a good one to select would be black and white, right? And if you select black and white, it should look like this. To set up colors to be easier on the eyes, go to where it says bull candle, and set it like on a blue, right? Then you go to bear candle and set it on a red. Now your chart should look like this. Um, so let's say that I select the Australian dollar with the US dollar. That's the first currency pair. Now, before I select the currency pairs, as you can see right here where it says 0.7098, the two biggest numbers would be the pips. You know, every little tick that the chart goes up or down is called a pip. So the 9 would be the 10th place and the 8 would be the 1st place. So if this goes down 10 pips, it would be 0.7088. If it goes up 10 pips, it would be 0.7108. You know, that's the pip count. That's how you calculate the pip count. And it correlates with how you make your entry. So let's go to the chart. So now the market just opened at 5 o'clock, right? These are, hold on. Oh, yeah, it's good. All right, at 5 o'clock, and these candles right here are going down. So now this is a 15-minute chart. So quick tutorial on the candles, right? I'm gonna go. There's minute candles, there's 5-minute candles, there's 15, there's 30, there's 1 hour, there's 4 hours daily, there's weekly, there's monthly, right? So I'm gonna go on a bigger time frame. Let's go daily, right? So right now, every single one of these candles represent a day. So 1, 2, 3, 4, up to the blue candle, that's 4 candles. 5 candles up to the blue candle, that's 5 days. That's what the price action did in 5 days. So I'm going to use this cursor. So from here to here, that's 5 days of price action. So the price action went from here all the way down to here in the last 5 trading days, right? Now you could look at that decompressed. This last day right over here, you could look at this day decompressed into 4 hours. So a 4 hour candles, one look, 1, 2, 3, 4, 5, 6. These last 6 candles represent one day. So you can see the price action how it went up in one day. So this is a bearish candle. Bearish candle means going down. A bullish candle means going up. And the analogy behind that is like a bear, puts his paw down, and a bull puts his horns up. So whenever you hear bullish, the market looks bullish, meaning the market's going up. Bearish, meaning that the market's going down, right? Now, So this is how it looked in the last 4 hours. This is what the last 4 hours look. Now you can look at the last 4 hours decompressed into 1 hour. So let's see how that looks. So this would be the last 4 hours. Remember, the market just opened, so we're still within the last this hour candle still forming. So it's 5:28 at 6 o'clock. This candle will finish wherever it finishes, and a new candle will start. So with the bearish candles, right? There's always a open. Look, I'm gonna go over here. I'm gonna go into a 15-minute candle. Remember, it's 5:30. So there's two 15-minute candles. It's in a half an hour. So this candle already formed. This is the action that it did in the first 15 minutes of the market open, and then a new 15-minute candle is forming. It's gonna finish forming in 2 minutes. So this candle opened up over here. It went this low, it went this high, but it closed over here. Then a new candle started. It opened right here. It went this low so far, and went this high, and it looks like it's about to close around here, but we still have one more minute. But we're gonna look at it real quick for 1 minute just so that we can see where the new one opens, and you can see where this one closed, just so that that could be clear. Um, so look, it's still going down. So the candle hasn't closed because the price is still moving, and you could even look at it on a smaller time frame. So look, it's a half an hour, 5 minute. It opened over here. Oh, let me see. So one, two. Look, if you look at these candles, 1, 2, 3, 4, 5, 6. That's half an hour. It's been 30 minutes. So now look, let's go back to the 15-minute candle. These two candles, this one just closed over here. There's a new candle about to start forming. Go. There it is. So it closed over here. A new candle starting over here. So in the next 15 minutes, that's when it will close. So now let's talk about placing a trade. So you place a trade. This is going to be one of the most important things, your entry, right? So right in the middle where it says market execution, you have the option of putting a trade. So a point zero 0.01 represents 10 cents per point or per pip. Pip is an abbreviation for price and percentage. So 10 cents per pip will be a point zero 0.01. I'm going to put a sell because it looks like the market's going down, right? I'm going to put a point 0.1 sell, and I'm gonna do a 1.0 cell just to give an example. So look right there, you see these lines right here. That's exactly where I placed three cells: a 0.01, a 0.1, and 0. Remember, the market's still is trending down. This is what I just did in quick. Like I'm just looking at it right now in like a quick couple minutes that I'm showing you this tutorial. I should have done this on my real account, but now look. When you go to trade right over here, the middle bar, you see your open trades. Now this is an example that I'm doing on a demo account. So you see the top one, 0.01, is 10 cents per pip. The middle one, 0.1, it's $1 per pip, $1 per point per pip, right? And the bottom one, 1.0, is $10 per pip. Now this account is a demo account, so it can hold these entries, but you don't want to. If you have, let's just say, $200, you have no business doing a 1.0, $10 per pip, because if it goes down or against you in if it goes against you, let's say you put a sell, right? And it goes up. Like right now it's negative because it's going up above your entry. Let's say that this goes up 20 pips with $200, that you'll be negative $200 on a 1.0, and you'll be wiped out if you have $200. So what you want to do is you want to keep it at a minimal risk. A good example would be like 10%, risking 10%, 5% to make 10%, like somewhere you can control that. Now, something that's cool about this is that you could also set a take profit and a stop loss. So this is a sell, so I'm expecting the price to go down, right? Now your money is in play until you close your trade. So look, I'm gonna do another entry. I just did another entry just to show you how to close it. In order to close it, you're gonna click to the left. You're gonna select the arrow, and you'll confirm it. You do a second confirmation to close it. So I just closed this trade with a loss to show you. You could also close it with profit. You could wait until it goes to profit, but I just did it just to show you, right? Now another thing that you could do is you could set your a take profit and a stop loss. That would be where a limit where you could, let's say a stop loss would be a limit where if it gets to a certain point, it'll just take you out with a loss, but you're controlling how much you're willing to lose instead of letting it run and you wake up and most of your account is gone because it went against your favor. You know what I'm saying? So let's say I put it at 50 pips going up. That'll be the fourth decimal point. So it's at 70.98 plus 50 pips, it will be about 71.50. Now take profit. Let's say that I do 100 pips going down. So I set it so that I'm willing to lose on this point $1 per pip. I'm willing to lose $50 to make $100. That's a one that's a 2-to-1 ratio right there, right? And I could do that with these as well. If I do, I'm gonna do the same thing on all of them. This is $10 per pip, this bottom one. So I'm willing to lose $500 to make $1,000. Because remember, 1.0 is $10 per pip. And then this one is 10 cents per pip. So I'm gonna do the same stop loss and the same stop loss and the same take profit. So if I do 71.50 and I do 700, a 2-to-1 ratio, 50 pips to make 100 pips, that would be I'm risking $5 to make $10. I hope you guys are with me on this, but that's just a brief explanation. Now, let's go to the Telegram channel, right? Some of the signals that have been given to us. One of the last signals was what? GBP CHF. So let's say that you just get a trade, right? GBP CHF, it says sell, and it tells you the entry price of where to sell it. It takes you to tell the take profit and the stop loss. So now we go to the chart. Now let's say that it's not over here out in your it's not right here on your, right? You could go to the plus sign over here and you could add you could add it. Say I'm typing it in, GBP, CHF, CHF. Yeah, it's right there. So look, boom, it's the bottom one. Click it. So you can see the price where it's called. So look, if I go, it said the entry price where it was called was at 32.28, right? This is a swing trade. This is a trade that's gonna happen long term. So 32.28, 32.28 was like about up here, like around here, right? That's where it was called. Like it was called like around here. And look, it actually did go down. But the take profit was for 178 pips. That's a lot of pips. So let's say I place a trade and we're gonna go safe. We're gonna go low risk management. Um, checking it out. I'm gonna put 50 cents. Point zero, 50 cents per point per pip would be 0.05. So I place a sell. Profit is 30.49. Loss is 32.86. So you're risking 55 pips